everyone. Welcome to the webinar today, Crypto Opportunities in 2025. This webinar today is co-hosted by Bates Group as well as Steptoe, and we are really excited. We have a lot of great topics today. I'd like to take a moment for a couple of housekeeping items. First, wanted to note that this program has been approved for 1 hour of general CLE credits by Missouri, making it eligible for additional credits in a number of states. Please check your state's CLE requirements to determine your eligibility credit hours. Near the end of the program, we will read out a CLE code that you will need. After the program concludes, you'll receive an email with links to the program materials, including an attorney affirmation form. Please complete the form with the code and return it to Bates at the email that we'll provide. You will then receive a certificate of attendance to submit to your state. So with that being said, I'd love to introduce myself and have our wonderful panelists also introduce themselves. My name is Brandy Reynolds. I am the Chief Growth Officer and Senior Managing Director of FinTech and Banking at Bates Group. And with that, I will turn it over to Alexandra Scheib.
Thanks, Brandy, and thanks everyone for coming. We are really excited to be co-sponsoring Crypto Opportunities with Bates, and I'm so excited to share the webinar with all my co-panelists. My name is Alexandra Scheib. I'm currently a partner at Steptoe, based in New York. I've been practicing in the blockchain and crypto space since 2017. I advise on legal, regulatory, and product structuring issues for both crypto companies and traditional financial companies who are now expanding into blockchain-based products and services. And I'm looking forward to discussing these topics today. Olta?
Hi, everyone, and thank you, Brandy, for having me. I'm very excited to be part of this amazing women panel. My name is Olta Andoni. I'm General Counsel of Enclave Markets, which is a subsidiary of Avalanche. I've been practicing in the industry and also as a professor in the industry since 2015 or so. Very excited to be here and to address this regulatory and compliance questions in this panel.
I can jump in. I am Heidi Peace, Head of Special Operations at Wave Digital Assets. And thank you so much to my fellow panelists for the invitation to participate. It's truly exciting to be a part of this, especially during these times. And thank you to the audience members who have joined. So very quickly, I have been in the digital asset space since 2016, primarily working at the beginning, helping nonprofits. So providing blockchain coding classes to girls' schools in Afghanistan, for example, and helping to really build out the blockchain ecosystem. A few years ago, I joined Wave Digital Assets. We are one of the very few SEC-registered investment advisors focused almost exclusively on digital assets. So with that, I do have to say, everything I say on here is my opinion. It is not that of the firm, and please don't take anything as financial advice. But the bread and butter of what we do is we help to manage the treasuries for some of the world's largest blockchain protocols. That is helping them with yield generation. And then I most recently have been helping with distressed crypto assets. So that's crypto-related bankruptcies, helping them to unwind those, and also supporting government agencies that are seizing crypto. I look forward to talking a little bit about that later today.
Thanks, Heidi. Hi, I'm Annalise Osborne. I'm Chief Business Officer at Kadena, which is a layer 1 proof of work chain. We are focused on building out both DeFi and TradFi on chain. I'm personally care about elevating capital markets. I also wrote a book called From Hoodies to Suits, Integrating Digital Assets in Traditional Financial Markets. And I'm super excited to be here on this panel with all of you. So thank you for having me.
Wonderful. Thank you so very much for that wonderful introduction. I would like to just take a moment to step back into the agenda just to ensure everyone has kind of some insights as to what we hope to cover today. If you do have any questions for the panelists, please submit those and we will try to get those worked in towards the end of the presentation. If we are unable to get to all the questions, we will hopefully be able to answer those as a follow-up after the webinar. So feel free to send any questions that you have along the way. So with that being said, we are going to jump right in. And so our first topic we want to discuss is emerging trends in crypto for 2025. So I'd love to start with you, Alta. What is your take on what's happened since the inauguration? I know that's really big focus right now. There's been a lot happening. So what is your perspective? Let's hear from you, please.
I mean, that's a great question to get us started because a lot has been happening since inauguration. And I'm very optimistic, cautiously optimistic, to be honest. And I do see that this significant change that is underway right now for blockchain and digital assets definitely is going to help, at least to drive the innovation or to bring the innovation back here in United States, as many, even myself for the exchange, I'm actually licensed offshore for regulatory purposes. But a lot has been happening from a policy, and hopefully we're going to see a lot happening from a regulatory perspective. So far, we have an executive order, which I think is super important for the industry. We had the SAB 121, and we can discuss further later on, that was repealed. We have a crypto task force that is dedicated to developing this comprehensive and clear framework regulatory that we've been looking forward for I don't know how many years now. I think that definitely the Senate Banking Committee and the House Financial Service Committee is going to play a very important role. And there is an upcoming hearing, if I'm not mistaken, is on February 11, which I think is going to be super important, because in that hearing, they're going to address stable coins, market structure bill, etc., which I think would be a great starting point for all of us. We have seen meme coins as well, which I guess we're going to have some questions later on about that. Something that I want and again, I mean, the disclaimer is that these are all my opinions and do not represent those of my company, but I do think that it's an interesting development when it comes to meme coins. Something that I would hope is that for crypto industry to not be associated or to, as the meme coin industry. We have so much more as a technology and so many much more use cases that we would like to associate ourselves with. But yeah, I mean, it's very hard to do the summary of everything. But as I said, these are what I'm looking forward for the next administration, or the main items.
So Alexandra, does that align with what you're seeing, or what your kind of perspective or insights are from your inauguration till here at the end of January, which a lot has happened since then?
Yes, Brandy, I agree with Ulta. We've seen a lot since the Trump executive order. Industry participants certainly feel like the federal government at the highest levels, together with the new acting chairs of the SEC and the CFTC, are all taking a pro-crypto product and pro-regulatory development stance here in the US. And what that means is, for market participants who have been holding back a little because they want to have some more regulatory certainty, or want to follow some administration guidance or some SEC or CFTC guidance apart from reading clues from enforcement actions, this is an opportunity. I think Ulta is exactly right that as we look at the key dates from the executive order coming up in February and March and July, as the next 6 months pass, we're looking forward to getting some more certainty. I certainly think that the repeal of SAB 121, which should facilitate traditional financial institutions' ability to become more involved in digital asset custody, which we'll talk about further later in the program, should also help facilitate more traditional financial institutions' ability to take a bigger role in the digital asset space this year and going forward.
Thank you so much for that. And so I'd like to switch gears just a little bit here. Heidi, I would love to get your thoughts from just everything that you're seeing, your perspective as to what are the most promising growth areas for 2025, and why do you feel that DeFi, NFTs, layer 2 scaling solutions stand out? this year
Sure,
specifically.
sure. And part of my lens comes from as I had mentioned, my firm, we manage the treasuries for some of the largest blockchain protocols. So we also do help them launch some of their ecosystem funds, whether that's DeFi or real world assets. We also have some venture funds. So that's where my lens comes from a bit. And I'm super excited to see the explosion of innovation that I think we're just on the precipice, especially adding in some of the regulatory clarity and the friendliness to bring that innovation back to the United States. Ulta mentioned meme tokens, which of course that's the hot topic of the day. We'll see what tomorrow is. But in addition to that, there's all sorts of the decentralized applications, dApps, that are bubbling up. So some that have been around and are bubbling up a bit more, and some that are really on the forefront of innovation. So, for example, decentralized AI, very, very excited about the intersection of AI and blockchain and the applications. I'm just going to go through some of these really quickly because I could go on for hours. There's also decentralized physical infrastructure network. So that's basically decentralizing the utilization of the internet, decentralized science, decentralized social networks, DAOs, decentralized identity, tokenized real world assets, regenerative finance, gamify, and so forth. There's a lot happening, but I think for now, probably the most or the lowest hanging fruit that we will see a bunch of innovation is going to be in DeFi, possibly NFTs. And the reason for that, it's being powered by some innovation within the underlying technology. So DeFi is decentralized finance. It's basically removing the middleman within financial applications so that it becomes more of peer-to-peer accessibility. And most of that started in the lending, but we're seeing that move into insurance and bonds and treasuries and other types of unique financial or traditional financial instruments, I should say. So one thing that's really exciting with this decentralized finance or DeFi is the application that's moving into the traditional finance world, or we call it TradFi. We have to have an acronym for everything in this space, but we call
Yes.
it TradFi. So we're seeing the DeFi application in bonds, treasury stocks, even real estate. And this makes accessibility so much broader. It doesn't have to be for those that have been either, maybe accredited investors or that have specialized skill sets so that's really exciting. I think I've seen around 350 million or more in tokenized US treasuries alone through BlackRock and Franklin Templeton. Very exciting to see also JP Morgan experiment with real world assets and bringing that into the institutional space. Much of this, as I mentioned, is being powered by regulatory clarity. I think we're going to get into that in a bit more. And then NFTs, I hesitate to bring that up because NFTs can also carry some sort of negative connotation just because of the big bubble that burst. But we're actually starting to see the application of NFTs. It's not just in digital art, but also in these real world assets. So using them for tokenizing real estate and allowing for real estate funds, fine art, fractional ownership, for example. So an NFT could represent a portion of a Van Gogh, whereas I can't afford an entire Van Gogh, but maybe I could afford a portion thereof. NFTs are also starting to cross over with identification. So we are seeing the development of what they call soulbound tokens, which is really utilizing my identity in the form of an NFT. And as I mentioned before, all of this is really being powered because the underlying technology is evolving so that some of the bottlenecks we saw before are being solved for that are making it faster, cheaper, more transparent, and perhaps even safer. I'll stop there. I could keep going for a long time, so I'll stop there.
Yeah, that's fantastic. That gives kind of a lot of perspective. What I would love to be able to try to connect is from your thoughts on what 2025 holds with those growth areas, but what about the upcoming regulatory changes? So what is the impact or the connection point there? So Ulta, I don't know if you have any thoughts on that topic, but would love to be able to kind of connect the two and just get some information about maybe that crypto landscape for 2025.
I think that the crypto landscape for 2025 definitely is very promising, but something that is important for our industry and for our legal and policy people in the industry is to understand that we only have 2 years to make this happen, because then with the midterm elections, and I'm not trying to talk politics here, but I think that's very important. That's why I think we have to be unified. We have to come together. I have seen like different principles from different associations. And I think as part of this industry, in order to turn those principles into law, is that we have to bring that unified outlook, because I think it's important when the regulators ask us for that particular language that they want to include in certain pending bills. That's exactly how we can represent the industry. Having said that, and I'm going to mention a little bit later when we talk about particular bills, I think that the main principles, or how I see the industry, where we're going to concentrate, I think that token issuance and secondary sales are going to be the primary or the heart of the discussion right now. Personally, with a couple of my friends, attorney friends, I just wrote an open letter it was published almost 2 weeks ago now, to President Trump, where we guided about some principles on how we can make United States the crypto capital of the world. And I think it's important, first of all, to concentrate on improving that SEC rulemaking and enforcement. And I think that it's important for President Trump and all and of course other players in the industry to be able to address this with the agency approach to crypto, because over this past 4 years, I mean, we have seen that the SEC has consistently exceeded the authority by pursuing actually good faith industry leaders, which hopefully that's not going to happen in the upcoming 4 years. And another point that I would like to emphasize is to concentrate a lot on the rollback tax rules, because I think that now this administration should concentrate a lot on how to push the entrepreneurs and how to push the leaders and developers in our industry, while leaving this well-meaning taxpayers uncertain rules about how they're going to calculate their tax bill at the end of the day. But I found very interesting. The other point is also the choke point, choke point 2.0. But yesterday we did see some good statements, or optimistic statements, from Chairman Powell. I mean, it looks like now the banking industry is going to be more approachable to crypto. And I think we have to take that with a grain of salt, because I don't know how direct or how supportive those banking institutions are going to be to the crypto industry. So I think the regulatory path definitely for security tokens is super important in the United States. At least for me, coming back here, I need to know how to register derivatives in the United States. That's why I have a vast license in the Cayman, because I just do not know how to offer perps. I do not know the legal and regulatory path on how to offer perps here in the United States. I think something that I would suggest, and I haven't seen a lot more, even from policy people, like we keep talking about this growing interest in blockchain role, especially in capital markets, but we're not talking a lot about tokenization of real world assets. And I haven't seen any particular agendas about the real world assets. So I think that this area sort of remains underdeveloped, I have to say right now, among policymakers. So I think that hopefully, I mean, we're going to lead those discussions and have some pushback on, how on the potential and how to transform financial ecosystems that I think yet need to gain their needed traction with our regulators. Sorry if I talk too much. I have so much more to say. But
that was actually perfect. And it kind of leads into the next section here that I wanted to address. And so that is compliance considerations. Something that you mentioned, Operation 2.0, very much stands out to me, because as I from my perspective, being a consultant here with Bates Group, but having that unique role of being able to work very closely with some of the top exchanges and crypto blockchain companies in the industry. As an interim compliance officer, you get so many different perspectives, and you see these challenges and issues from the inside. So not just from a consultant's perspective or just from a one-sided role at a company as an employee. And so some of those unique challenges that I see, number one is most definitely the banking issues that we see within the industry. From my career perspective, I lived through Operation Choke Point 1.0 and now 2.0. So it's very difficult seeing companies who really have a desire to be good actors in the space that want to promote innovation and have high standard compliance programs, and they want to be able to engage with regulators and so forth. But from the very beginning, when you have that challenge of just obtaining a banking relationship or maintaining it for many of the firms out there, I definitely foresee that as one of the biggest challenges that many still face in the industry. So to your point, I am very hopeful that there will be some changes in the industry as it relates to banking, and really the education piece, because I think that goes hand in hand with it. Another challenge I would love to point out here, and also just get perspectives from you all if you have seen this as well, but it's lack of clarity on some of the regulations. And so oftentimes, because many of those operating in the space, they may be money services business because of their specific business model or flow of funds and business plan, but not all of the rules or regulations neatly fit a crypto money services business, if you will. So you mentioned some things earlier. One thing that stands out, travel rule compliance, right? So that's something that there's still a lot of questions around. For those that have state compliance obligations, we see a lot really struggling with the rules and the requirements that state regulators impose on money transmitters. They were written many years ago before these type of businesses were operational. So if anyone would like to weigh in there, I would love to get some perspectives from you all.
I'll just jump in really quickly because you mentioned money transmitter rules. It's something interesting that we're facing. So I'm helping some states with their legislation and their thoughts for their crypto innovation. And some of the projects I'm hearing about would be, for example, clarity around money transmitter rules and laws for like a node operator. The node operator is, what do you do in that instance? Or someone who's holding onto a self-custody wallet and wants to transfer funds to another wallet. So just Brandy, I just wanted to highlight that I am hearing the same thing from the state's perspectives is how do we provide better clarity on these technologies that don't necessarily fit the traditional mold of a money transmitter entity, but yet they're afraid that they could be dinged with something like that.
Although one thing I will say, just not to sound positive all the time, is that the state banking regulators also have been more interested and willing to engage with projects. And when we go do money transmitter licensing projects or reach out to state regulators to talk about a project, that it's much more sophisticated than it was a couple of years ago. And we know that there are gaps in the regulation that state regulators are trying to fill, either with pro blockchain initiatives. I know some of us are working with state governments on that. But the idea is really to come up with a solution so that these products can be offered safely for citizens of the states. And we've been pleased so far and hopeful that states will continue to modernize their rules where needed.
I fully agree with Alexandra, and I've seen the same, and I've been a speaker in conferences with some state regulators, and something that I think probably would be helpful for our industry is to have a unified licensing process. I know that there are some pros and cons right now in between states when it comes to unifying and have like this particular portal where you can go and apply for other state licenses. The other thing, Randy, since you mentioned the travel rule, and I think like that is going to be the hot topic for the next 2 years or so. And considering that I am the GC of a startup, two main questions I have to address every day. First of all, it's very costly, especially for early stage startups like my startup. And second is that we still do not have like the clear guidance where the travel rule is going to be applicable or how it's going to be applicable. I'm grateful there's so many vendors and there's so many leaders in our industry that we work together, just like yourself. And I think that this guidance is going to be super important for us, especially, as I said, in the coming 2 years.
Absolutely. And one other compliance consideration that I wanted to discuss here is also, not just from a provider, so like an exchange or someone directly offering these services, but what about the compliance considerations for the banks themselves? And so we're often asked by these traditional financial institutions or those in TradFi, we would love to bank, crypto or even other high risk industries, but we don't know how. We don't know what the expectation is from our regulators. And how do we go about it? Do we also need to be monitoring the transactions? And if so, we know nothing about blockchain analytics and what that means for us. And so I think, again, when you look at what tools, resources are available and how do you kind of bridge that gap, a few things stand out to me. It's, the various different associations that are out there, whether it's, take your pick, right? Blockchain Association, Digital Chamber. There's so many state associations as well. The Money Services Business Association, they're also trying to bridge that gap with the money transmission side of things in crypto. Outside of that, there's many different organizations offering training. ACAMS, the Association of Certified Anti-Money Laundering Specialists, they're one. We were able to help provide some guidance and work on their task force to create their crypto certification. So it's very promising to see so much happening with the education piece. Many of the providers that we've seen on the technology side, they're also offering free training. You reduce cost tools to regulators to try to, again, bridge the gap between that side. I would love to see if you all are hearing anything different or if you like to highlight or showcase anything additional.
Yeah, Brandy, I'll jump in there because I do help with government agencies that are holding on and or seizing crypto. And it's really exciting to see these service providers that have been developing in the space that provide the AML, KYC, basically on-chain crypto tracking tools. So the firms like Chainalysis, TRM Labs, Elliptic, Crystal, and so forth. And to your point, they do almost all of them, if not all of them, do offer very specialized training, excellent training programs. And then there's also firms that can be hired that they specialize in off-chain and on-chain analytics in regards to AML, KYC. Lots of firms that are working with numerous government agencies. So the resources are starting to be there. My firm is also providing investigation solutions. We're seeing that the need, the supply is starting to, there are more firms that are stepping into this space. So super excited for that development.
Wonderful. Let's move on to our next topic here. So institutional adoption. And so I would love to be able to start off with Annalise for this particular question. Would love to know what are the key drivers behind the increasing institutional adoption of crypto assets in 2025. So a little bit of a shift from what people think, but that institutional side I think is most definitely increasing from what we have heard as well. So what perspective can you add there?
Sure. Well, I am loving listening to all of this about policy and regulation as a non-lawyer. I'm absorbing a lot, so I appreciate it. From an institution perspective, I will say I just got back from Davos, and what was interesting, if we're talking about RWA or banking policy, right, that in Davos you had really the top leaders of institutions, BlackRock, you had the banks, you had JP Morgan, Bank of America, Goldman Sachs, Morgan Stanley. Really, majority of the banks were out there talking about blockchain and crypto and really how it's the next steps and how they will be using that. So that is interesting. It did coincide with the inauguration as well. But also within the actually closed off forum, you had both Coinbase and Circle talking to the World Economic Forum. And so that is interesting because they're learning more about crypto as well. So I do feel like that's positive from an institution perspective. I think people are starting to recognize both the cost savings and then the revenue generation, which is really what any business needs to come down to. And so that's where I think, you know, as we dive into this a little bit more, we're going to see some more of that come up. Brandy, I totally agree with your, when I look at the 3 points for holding up adoption of digital assets in institutions, it's really, you know, my first is education. And I think there's a big push towards education, exactly what we're doing, spending more time out there, just explaining the difference between Bitcoin and blockchain, which a lot of people are afraid to ask and don't understand. And so before you get a little deeper, I think that's what a lot of kind of probably both, you know, Washington, D.C. and many state governments, if you look at it, who's running it, I think that's important to think about, which is also, to be honest, the reason I quit my job and wrote a book is because I felt like there wasn't education out there on actual capital markets, right? There was a lot of books out there on Bitcoin or DeFi, but none of it was like, this is a great technology and this is why it's going to help. And this is what institutions are doing today and why. So the next is, I think, regulatory clarity, right? I think that there's certain districts out globally that are focused on regulatory clarity, trying to come up with not a black and white, but that gray in between. And so I feel like Mike is doing a good job of that. I think obviously Singapore with, has done a good job that with the sandboxes in Singapore. And a lot of these banks are actually looking to work in sandboxes to try to figure out next steps. And then I think in the US, there's a very positive sentiment. So I think that positive sentiment is going to help both in institutions paying attention, because look at what all the other institutions, like, people don't want to be left behind. I think so that's going to be helpful. And I also think innovation is going to help. So from a building perspective, this positive sentiment with the expected changes in regulation and legislation that are coming up. And finally, so education, regulation, and the last is interoperability. So some of these systems for institutions are so old, built forever ago and built on top of each other. So it's not as easy as like a plug and play where you just come in with a new system. Like if you look at some of the newer economies, that's a little bit easier. Or if you look at gaming, for example, like that's all technology already, and they're trying to use the fastest and the best. But if we're talking about old school finance, which is incredibly old school, and there's regulations that people are required to keep all of the record keeping as well. So a lot of times you're just building on top. So that interoperability within, from like the banks or the institutions into the blockchain is one issue. There are APIs and there are things that are being done. And I think people are upgrading systems. So that's interoperability both in that way, and then also creating standards within the blockchain industry, which is also interoperating between blockchains. So that's kind of what I think. Like, I think we're definitely on the path. Things are moving forward, but I feel like those are the 3 things that we need to continually address. But I'm super excited to see what we're doing in 2025.
So let me ask this. So what strategies are institutions employing to navigate the space?
So I think there's one thing that's super interesting is that in the past, people were really looking at private chains. So private chains, I equate them to the intranet. So remember when the internet came out, people were looking at the internet. So because then, sorry, the intranet. So it was really like a bulletin board. But then you recognize the benefit of actually having access to all this information, and the internet is really much more prevalent now. I look at the same as the public chains and the private chains. And so what's happening is that I'm finding and I do work for a public chain, but I believe that's kind of the future and where we're going, is so much more interest is figuring out how to work on public chains instead of the private ones. And so how they're doing that is also looking at it, working in the sandboxes, right? So I feel like there's a lot going on in the sandboxes, both out in the Middle East and out in Singapore as well, that they're actually figuring out how to work with permissioning. So we have KYC AML, which is important, obviously, but working in a permissioned environment within public chains. What else? Asset managers. Okay, so asset managers are recognizing the benefits. They're looking for both new clients and reducing costs, so increasing revenue and also decreasing costs. And they can use tokenized funds to do that. So it's cheaper to run once they're established and we pass the legal hurdles and the illegal expense. There's lower cost in running tokenized funds, but also right now the asset managers are going into the different ecosystems for the different chains to find new clients. And if you look at the world of changing, like the changing wealth dynamic, that millennials and Gen Z will soon have all the money and they're very natively digital, you're much more likely they're the next base of clients that asset managers need to go to. Because currently there's like the same group that people are always going to for the major asset managers, and they want to increase their AUM, but the same group is not increasing their AUM by 20%. And so how do you do that? You find new clients. And so generally those are not retail clients, but if you look at the wealth dynamic, the retail, be it obviously we have, different concerns of retail investors that they're aware of what their accredited investors or what have you, but that is really where people are going and hitting. And I also feel since they're recognizing that other asset managers will recognize that as well and follow suit.
It's going to be very exciting to see what comes about there. And let me ask you, before we go to the next section, so I do want to get in one question. So sorry to cut you off there. But Alta, I would love to get some thoughts on the introduction of spot crypto EFTs and enhanced custody solutions to the market landscape. So what can you add there?
I promise I'm going to keep this short. But Annalise, I fully agree with you. And I think like this is a perfect segue because truly for our industry is so important to bring the institutional players. And how are institutional players going to pay attention, more attention to our industry? I think with spot crypto ETFs, especially concentrating on the custody services solution, definitely we're going to have more traction from this institutional players because they're going to bring better security for institutional and also for retail investors as well. And I think that it's important for us as an industry to kind of reduce those fears of hacks and frauds and other risks that institutional players definitely take into consideration. When I speak about the benefits of spot crypto ETFs, I kind of wear different hats. I wear the business hat once, and then for my next analysis, I wear my legal hat. I think from a business perspective, as an exchange, definitely ETFs are going to be super important because they're going to bring, in my opinion, a very large, and I'm sure it's not like only my opinion, but it's definitely we're looking at a large influx of capital, leading to deeper liquidity pools, which is super important for the exchanges. And I think that probably this might play a very important role even in reducing the volatility that we have usually in the crypto markets as well. Now, talking from a legal perspective, I think that definitely this is going to bring a lot of more adoption, are going to pave the way for options and for futures and for more structured financial products to kind of be tied more into crypto. And I think that, again, going back to institutional players and how the institutional players could use ETFs, they definitely can consider this hedging strategies when they work. I mean, how they can use the ETFs and pretty much just like they do with other commodities as well. So I think that it's super important, and hopefully we're going to see I'm not mentioning names, Ethereum. I mean, we already have the Bitcoin ETF. Something that I want to emphasize is that I see some of our legislators right now concentrating on more Bitcoin reserve, which is perfect. Actually, my state today just, I mean, they're working on this Bitcoin Reserve Act that was just published, and I'm very excited about that. But I think that we shouldn't tie, in order for us to get that crypto adoption that we need, I don't think we need to particularly tie this only to Bitcoin reserves.
Perfect. So this is a good segue. So speaking of just more adoption and use cases and what's happening in the industry, moving into cross-border payments, stable coins, and central bank digital currencies. So Annalise, what do you feel is kind of the opportunities for the central bank digital currencies in cross-border payments specifically? Oh, you're on mute. You're on mute.
Sorry about that. I was like, this could be a whole topic by itself. CBDCs, so central bank digital currencies, really, in essence, it's something backed by treasuries or central reserves. So Bank of International Settlements says 86% of central banks are actually at early stages of developing CBDCs, with 15% going towards actual pilot programs. I think people are looking at them for cross-border payments. We look at enterprises, $23.5 trillion corporates used transferring cross-border payments last year for a cost of $120 billion. And that's just the straight cost, not FX or any hidden costs from trap liquidity. So the idea here is that CBDCs or any of this, you're gonna decrease the cost. You're going to save money, have it in your pocket. I think there's both different things with CBDCs. Look at, I think China is interesting for CBDCs. They had over 90% of their payments were mobile before, but they were both in Alipay and WeChat, which in two private companies. And so they have actually launched a CBDC. I think it's probably a little bit different for them. They're not focused on cross-border payments as much, but internal currency. But right now they only have about 18% of their population that actually has a wallet. So it's much easier to open a wallet than a bank account, which is something that you can think about when we're thinking about creating cross-border payments and some of the unbanked. But from a CBDC perspective, I really do think it's a cost savings. It's also the speed, but I think that's to another question.
Yeah, and so Alexandra, so I want to kind of let you respond in here, either to what Annalise indicated, or just what you feel are some inefficiencies that are being addressed by crypto innovations as well.
Well, before we move on, I did want to note for everybody that the Trump executive order did have a specific prohibition on any activity or development related to a CBDC in the US. And this was notable because the rest of the executive order was very positive on all digital asset developments. And so I think we should be thinking about CBDCs in other jurisdictions, but at least in the US for now, there is a prohibition on digital assets for CBDCs at the federal level. Certainly, a lot of market participants are viewing this as a favorable development for private stablecoins, because if we're not going to have CBDCs in the US, this is an opportunity for even more adoption and integration of private stablecoins. And I know that some of my panelists have feelings about developments on the private stablecoin market and how they're penetrating commerce and retail usage beyond just what they've been used for historically the last few years, which has been primarily just transacting in other digital assets.
Yeah, so I'd love to open up, Heidi.
Yeah, sure. So, to Alexandra's point, it's very true that there has been a shutdown on the movement of a CBDC here in the United States. And I would like to say that's probably for a few reasons. One is that many politicians and us as Americans were very weary of having any kind of tracking of our finances at all and monitoring of our finances. So that has often speared the reason to not move forward with a CBDC here in the United States. And in addition to that, the stable coins are stepping up, private sector stable coins are stepping up and solving some of the problems that CBDCs could solve for. So cross-border payments, speed and efficiency, and so forth. I have a little bit of a different take on that. One of our panelists mentioned the digital yuan. And it is true that there is monitoring. I have a friend who lives in China, and when he went to purchase another pack of cigarettes with his wallet was turned down because apparently the government had decided he had too many cigarettes for that month. So it is very scary to see what can be done. But I will say there's also, and again, this is strictly my opinion, but I also think that there's a national security element here down the road to consider. And that is if countries like China have a digital yuan that they may be white labeling to the global south or to developing countries. And as Alexandra mentioned, the 1 billion plus unbanked or underbanked, it's so much easier to get a wallet versus open a bank account. If the digital yuan is being white labeled, who do you think is going to start using that digital yuan? Not only that, but BRICS. Putin had mentioned before the goal of toppling the dollar and perhaps creating a BRICS coin. And so these are things to consider if China indeed, or maybe other countries that are not necessarily our best friends, have their own digital currency that they white label. What happens then when those countries and those peoples are using that technology and the country behind it says, hey, I decide I'm going to shut down your access to that digital currency, or I'm going to use the data that I have on your citizens in some nefarious way. So those are the types of things I think we should start to consider for the future. Is if there's not a digital dollar, what does that mean for the role of the dollar globally and just the security as well, not just for Americans, but those around us?
And thank you so much. Oh, go ahead, please.
Brandy, just very quickly. I mean, I just want to give my take here. I know we don't have much time, but I mean, I think that based on this executive order, I mean, definitely we're moving away from central bank digital currencies. I mean, that's how I think I see it, because pretty much the executive order just states that CBDCs, they consider that a risk that threatens the stability of financial system. So, I mean, I'm not sure how much we can do here. I'm not personally a big fan of this. Is just my personal opinion of CBDCs. I would like to concentrate and hopefully to see a lot of more on stable coins. Something that my read from this executive order is that even for stable coins, I do not think that this order addresses directly stable coins. I think that they just state that these stable coins are going to promote development and growth, you know, and lawful and legitimate use of dollar-backed stablecoins. And I think maybe, I don't know, I mean, there may be many reasons why they are not directly addressed in this executive order, but I think that hopefully we're going to see a little bit more development about stablecoins. Probably, I mean, they're concentrating a lot more on the backing of U.S. Treasury bond holdings, etc. I can go on, but I do not think that with this executive order, we're going to see a lot of movements in regarding CBDCs.
I would agree.
Sorry.
Actually, that
Just 2 cents to add to that, and thank
Yeah.
you. I agree with you. I think that there's going to be more focus on stable coins and regulations there, on how stable coins, the treasuries behind it, and so forth. But I will say that we might see states stepping into this role of issuing their stable token, which is, and actually the state of Wyoming is issuing its own stable token. So it's very interesting to see, what does that mean from an international global market? Will we see a drive towards the Wyoming stable token or the Texas stable token? Because in all sense, it is a US entity. So anyway, many exciting things on the forefront, but I totally agree with you. There will be more focus on stable coins.
Okay,
so
I
you
have
all
to
did a
add this.
fantastic job. I was going to
Brandy.
say the anticipated industry developments. So please, Annalise, I was going to say this ties very much into wanting to cover what are we anticipating for 2025 in the industry with legislation. So please feel free to add your comments.
Mine was more on the idea if every state issues their own stable coin, it's like every bank issuing their own stable coin, which brings you back to before we had a federal currency. So that is something that just something to think about to throw out there. But I feel like that's a whole nother conversation. So we can get back on track.
I think that would definitely open up a lot of things there, a lot of concerns, issues. But yeah, we'll kind of step back to that state level in just a moment. From just a federal level, so want to touch on just potential insights from what we can expect from a federal level. So whether it's the SEC, the CFTC, the roles for evolving in regulating the crypto industry. So Alexandra, if you could just maybe start us off with just what legislative or regulatory developments do you feel are most likely to foster innovation and adoption in crypto for 2025?
Well, I want to come back to one of the things that Olta mentioned earlier, which is the role of derivatives. And one of the things that as a derivatives lawyer, I'm excited about is the fact that the CFTC is now helmed by an acting chair who has an interest in digital assets, in modernizing the CFTC's view of digital assets and helping market participants facilitate derivatives. Some of the pending legislation also foresees a larger role for the CFTC in regulating digital assets generally. That stems in part from the fact that if, I think most of us on this panel agree that not everything should be regulated as a securities transaction, and not every individual digital asset should be considered a security. Well, one of the other things they would be considered is a commodity. And since the CFTC's role is regulating commodities and derivatives, I'm looking forward to more certainty on how to stand up derivatives, trading desks and trading facilities, regulated derivative products, and thinking about more individual digital assets as commodities and how to structure businesses around that. In my career, I spent a lot of time on the adoption of Dodd-Frank and developing regulations, with the support of swap dealers and security-based swap dealers and others in the industry to make the regulations safe for investors, but work for the business. And I think this CFTC is thinking about things the same way. And I'm looking forward to an increased role for the CFTC and for swaps and derivatives on digital assets.
Thank you so much. Let's see. So we have about 10 minutes left. So I want to just highlight just a couple of other points. I know that you all were very excited to make sure we got in as well. So quickly, would love to get some thoughts on the working group on digital asset markets. So Heidi or Alta, would you like to just add just some very quick comments there about that working group?
Heidi, do you want to go first?
Sure. So I'm just going to jump off of what Alexandra said with clarity, regulatory clarity, especially with the CFTC. So right now they're through this working order through the Crypto Commission, which I think is all going to be about regulatory clarity, and supporting innovation. And part of that is, as Alexandra said, there will be more clarity coming out of the CFTC, but also from the SEC, the Treasury Department, and other agencies. In fact, those agencies I just mentioned and more have been tasked to create task force to work with the public on what they can do to provide better clarity. So if anyone in the audience is interested in supporting that, I highly recommend reaching out to one of those agencies to maybe offer a white paper. The other thing that and I know Ulta might be talking about a few other things, so I'm just going to skip into the Bitcoin Reserve. This is such a brilliant idea. So the United States, through primarily the IRS criminal investigations and the amazing team that they have there, and then other law enforcement agencies like the DEA and Homeland Security and the FBI and so forth, they have accrued about $20 billion of digital assets. And it's not just Bitcoin, it's Bitcoin and altcoins. Now, half of that has to be returned to victims, but we're still left with $10 billion-ish of crypto that could be, and it's forfeited assets that could be reappropriated to help fund this crypto fund. So I think that it's a brilliant idea. I'm super excited about it. And we're seeing this as a mirror effect in multiple states across the country. And it's not just Bitcoin. They might call it a Bitcoin reserve, but very often in the legislation, they'll say Bitcoin and digital assets. So it is a wider cast net, which is great. And we're now seeing countries pop up. I just saw the Czech Republic this morning said something that they're going to allocate 10% of reserve. I mean, it is super exciting. So love the idea, love the concept, and yeah, and anyway, just love it all. Ulta?
I fully agree with you, Heidi. I mean, from my point of view, this working group, I think, hopefully it's going to concentrate, and seems like it's going to concentrate on defining the legal status of the cryptocurrencies and which one is the regulator. You know, here in the United States, we're still discussing SEC versus CFTC, which is a big question. And I don't think there is a particular or the best regulator. It's very hard to define that best regulator. But from a legal perspective, I think that is going to be super important, at least to define that crossover between the jurisdiction, SEC and CFTC. So streamlining that compliance path that is going to be super important for startups and especially for institutional investors. As I mentioned, to launch those new products is going to be super important. That's why I hope that this working group is going to help there. The last thing that we need here in the United States, in my opinion, is a third regulator. I know that there have been some discussions, you know, to have a third regulator to kind of mix those crossover jurisdictions between CFTC and CSEC. I don't think we need that. We have enough regulators here. We just need to define which one covers what, and especially clearing that path from us. I mean, when we look for these licenses and to comply with the regulatory licenses out there. Sorry, I mean, I have so much more to say, but that's my point of view.
No, that's wonderful. And I do have a few questions, and then we will not get to all of them. So as I mentioned earlier, we will try to follow up with the additional answers to some of the questions here. But before we end this session and get into some of the questions, I would like each of you guys to just, in just a few words, indicate what you feel is the most significant regulatory change on the horizon. I know that's going to be hard because there's so many, but limit it to one. So we'll start, Annalise. What do you feel is the most significant regulatory change on the horizon?
Wow. Put me on the spot.
I did. And we can come back to it if you like. So it's hard to narrow that down.
No, I mean, like the most significant, like my concern is it's very difficult to regulate innovation because innovation is constantly moving and changing. And so that I think is one of the problems. We need to have guidelines so we're not playing in the gray, because institutions can't play in the gray. So my concern is an overregulation, right? I think we've been under-regulated and we've been having to follow laws we didn't know, like people didn't know they were held to. So I feel like my concern is overregulation.
Yeah.
Coming.
Perfect. Alta.
So for me, I think that the most important, and I didn't have a chance to talk about this, but there's three important bills right now pending. Is FIT21, is the Clarity for Payment Stablecoins, and also is Loomis Gillibrand Payment Stablecoin Act. And my main concern right now is FIT21 bill. I mean, if it was me, I would shred this bill right now because there are so many problematic aspects that this bill actually addresses by creating this divided market for crypto tokens and distinguishing between restricted digital assets and digital commodities, especially based on the decentralization concept, which we still do not have a clear definition of decentralization. And I'm not sure how the startups, let's say if this FIT21 goes through, I am not sure how the startups are going to be able to comply with the FIT21, especially decentralization process. Going from stage one, probably you're going to report to the SEC, and then stage two, you're going to be under CFTC jurisdiction. I think that this bill, I mean, helps crypto tokens that are transferred or pursuant to investment contract to not become securities. I think at least they're clear there, but I hope that FIT21 has a good workout. I mean, definitely is not the right act for us right now, the right proposed bill. The other second item that I would like to, that I think is going to be super important for the crypto industry is the repeal of the IRS broker rule. And we do know, and I'm sure all the listeners here, they have seen the proposals from Senator Ted Cruz and from Mike Carey, and they both have introduced in their respective chambers to repeal resolutions to repeal the IRS rule. And I think that it's going to be super important for DeFi companies and that they define as brokers subject to this rule.
Perfect. Heidi, very quickly, what do you feel would be the top from your perspective?
So I'm actually not going to answer that question because I think Ulta and Annalise did a great job. But what I will say is I'm going to spin it and say, where do I think more of the innovation is going to happen as a result of the White House and some of these regulations? So I think maybe some of us had heard that Elon Musk was considering using blockchain to track and trace budget and expenditures on a federal level. That's an amazing initiative to take on, but can it happen? I don't know. That's we're talking about a huge entity there. But where I do see innovation as well happening at a much faster pace is going to be at the state level. And that might be through the formation of sandboxes that I'm seeing pop up, in addition to the digital currency reserve funds that have been mentioned. But these sandboxes can be a place where you do take on the thought that Elon Musk had, is why not use blockchain for maybe test pilot at a local municipality to track budgets and expenditures, or voter fraud, or
So many
other
use
initiatives.
cases at that state level. So I'm very excited
Absolutely.
also. There's going to be so much to keep up with this coming year. And Alexandra, to close us out, what would you think is your top?
My top is, I'll speak very quickly, rescinding SAB 121 with SAB 122. It was a great development for banks and other financial institutions for crypto custody. I agree with Ulta, getting one of the bills through with clarity for payment stablecoins is going to be very helpful for advancement of innovation in this market.
Wonderful. No, thank you so very much. The panelists, you all did wonderful. We threw a lot out to the audience, a lot of information, great insights. We, as I mentioned, have many questions that we'll try to follow up with. We did answer many of them along the way. So we'd like to thank everyone again for joining us for this hour. Thank you so much for your time.
Thank you all.
Thank you. Bye.
Thank you.
Bye.
Bye-bye.